Hi everyone, Martin Bamford here, and this is your Money News Fix. 5 personal finance stories that are rocking the world of money this week. Everything you need to know in just a few minutes. Here we go. Uber drivers should be treated as workers, not as self-employed. That's according to a ruling in the UK Supreme Court. The decision could pave the way to thousands of Uber drivers receiving minimum wage and holiday pay, with widespread potential implications for workers across the so-called gig economy. The Supreme Court ruling was based on a small number of drivers, and Uber claims to have made subsequent changes to its business model to address their issues. Uber is defending legal challenges in several countries over the classification of its drivers as either workers or self-employed. Delivering the Supreme Court judgment, Lord Legate said Uber drivers should be considered to be working not only when carrying a passenger, but whenever they are logged into the app. Uber drivers are classified as workers because Uber sets the fare, dictating how much drivers can earn, and Uber sets contract terms which can penalise drivers if they reject too many rides. Because drivers are in a position of subordination to Uber, where the only way they can increase their earnings is to work longer hours, the Supreme Court decided they are not self-employed. One potential implication following this ruling is that VAT at 20% could be applied to Uber fares in the future. Shiny digital nothingness Bitcoin has risen in price to a new record high in excess of $50,000 per virtual token. The price of Bitcoin has risen by around 72% so far this year, as a growing number of institutions speculate on future price rises. A significant part of the gain achieved this year was driven by Tesla's decision to gamble with $1.5 billion of corporate funds, as well as agreeing to accept Bitcoin as a payment option for its cars. Bitcoin believers say that the cryptocurrency can act as a store of wealth, often likening it to digital gold. At its current market price, with a cap of around $931 billion, Bitcoin represents around 9% of the market capitalization of gold. However, Bitcoin has no intrinsic value, and its price is subject to wild fluctuations. While the supply of Bitcoin is said to be finite at 21 million units, there is a potentially limitless number of cryptocurrencies available. The cryptocurrency market is also a haven for fraudsters and scammers due to its pseudonymous nature and get-rich-quick connotations. As many as 500,000 renters could become homeless unless they receive financial help, according to a group of charities, lenders and landlords. The group has asked the government to offer a targeted support package for renters facing a debt crisis during the pandemic. They warned that hundreds of thousands of renters could lose their homes in the coming months if more support is not provided. The organisation said the longer the Chancellor waits to take action, the more rent debts will increase. According to the Resolution Foundation, recently more than 750,000 private renters have fallen behind on their housing costs, up from 450,000 a year earlier. Only 3% of private renting families have been able to negotiate a lower rent with their landlords during this pandemic. The group calling for government action consists of Big Issue Ride Out Recession Alliance, Crisis, Citizens Advice, the Joseph Rowntree Foundation, the Money Advice Trust, the Mortgage Works, the National Residential Landlords Association, Nationwide Building Society, Property Mark, Step Change Debt Charity and Shelter. They said the government increased universal credit and housing benefit because it recognised that the system was not doing enough to support people in the first place, yet it has chosen to freeze housing benefit rates again from April and is considering cutting universal credit at the same time. It cannot be right that these measures could be pulled away from renters during continued economic uncertainty. Price inflation could rise to exceed the Bank of England target of 2% later this year. The latest official price inflation figures show the headline figure of CPI, or Consumer Prices Index inflation, up to 0.7% in the year to January, up from 0.6% a month earlier. The price of food and household goods contributed to this inflationary rise. The Office for National Statistics reported that food prices rose by an average of 0.6% in the year to January, after falling by 0.1% a month earlier. Premium potato crisps, cauliflowers, fresh salmon and frozen prawns were discounted before Christmas and therefore contributed to a big rise in January. Forecasts for price inflation for the rest of 2021 remain uncertain, with much depending on the roadmap out of lockdown restrictions. However, the successful rollout of the government's vaccination programme is likely to contribute towards rising prices, as consumers are freed up to spend some of the £125 billion in pandemic savings that they've accumulated over the past year. Corporation tax will be increased in the budget next week, according to a report in the Sunday Times. The tax hike will be used to fund an extension to COVID financial support schemes, reported elsewhere to be lasting for another 6 months. The budget on the 3rd of March is expected to feature a gradual rise in the rate of corporation tax from 19% to 23% by the time of the next general election, raising an estimated £12 billion a year. The newspaper report speculates that corporation tax will go up by 1% in the autumn, with further tax rises scheduled for later years. The money raised by the corporation tax rise will pay for an extension to the furlough scheme, self-employment income support scheme, VAT cuts and business support loans until at least August. The Sunday Times quoted a source as saying the corporation tax hike will be higher than expected and the extension of the support schemes will be longer than most people expect. That was your Money News Fix. Don't forget to like, share, comment and subscribe. I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.